financial advice. I'm recording my thoughts about Arista Networks. Arista Networks stock is currently trading at about $162 with a market cap of about $50 billion. When I look at the PE ratio, it's about 38, which is on the expensive side. Arista Networks is a cloud networking solutions company that's operating around the world. It has more than 9,000 customers, and its main customers include Microsoft, Meta, JP Morgan, etc. Arista Networks has three revenue segments. The first one is data center and cloud networks, which they call it as core, and that represents about 60% of their revenue. And then they have campus and routing, which represents about 20 to 25% of their revenue. And then software and services, that represents about 10 to 15% of the revenue. And if you want to look at how their hardware looks like, this is the picture. Now that we know Arista provides both hardware as well as software, let's look at the health of this business. As you can see on the screen, this is the chart for revenue growth of Arista Networks. In financial year of 2018, they made about $2.1 billion, and they doubled their revenue in financial year of 2022. And that's about $4.3 billion. So the revenue is growing at double-digit pace, which is good. And then if you look into the market share, they're snatching market share away from Cisco, which is their biggest competitor. It tells me that Arista Network has competitive advantage. And let's look at Arista's vision for 2025. They're saying that they will invest more in their core business, and they will also add new revenue segments in the form of transit WAN routing and edge as a service. So they're looking at new revenue sources in the coming few years. Now let's look at some numbers. In financial year of 2022, they grew their revenue by about 48% to $4.3 billion, and they have been profitable since 2014, and they have been posting positive net income, and in the recent year, their net income is about $1.3 billion. It is very impressive to grow it in double digits, more than 20% year on year, and still be profitable. When I look at the number of outstanding shares, this company has 316 million outstanding shares. They're giving stock-based compensation and buying it back. So they're very good to the shareholders by maintaining this number of outstanding share count. They have about $3 billion of cash and a very healthy debt. So their balance sheet is also good. Now let's look at its evaluation in 2027. In the next year, they're saying they can grow about 25% and make about $5.5 billion of revenue, which is good if they could do it. So, but in the evaluation, I'm going to assume that they will make about $4.38 billion of revenue in 2022. For the revenue growth, they're saying they can grow more than 20% year on year. So I'm going to assume the same revenue growth, with which this company would make about $11 billion of revenue in 2027. This company's gross margins in the order of 60 to 65%, but they're keeping their operating costs in check and making sure that they can get 27 to 33% net profit margin. So I'm going to take the average of both and say that this company could make about 30% net profit margin, with which they could make about $3.3 billion of net income. For a company that has 20% revenue growth and 30% net profit margin, I can assume 27 to 27.5 multiple. But since Arista is investing in innovation and it is snatching market share away from Cisco and trying to add new revenue segments, I can pay a premium of 30 multiple, with which this company would be worth about $98 billion in 2027. I'm going to assume the number of outstanding shares as 316 million because they have been pretty good at maintaining this count. So with that, this company's stock price would be about $310 in 2027. Currently, they're at $162, right? So that's about 92% gain in 5 years, and that is definitely attractive. While I see the valuation as an attractive one, I do see a couple of risks. Number one is they have some IP litigations with Cisco. They paid about $400 million a few years ago. So I do not want to be associated with a company that has IP issues and litigation issues, but I think in case of Arista Networks, I'm going to make an exception. Number two is they have concentrated revenue in a couple of clients, like Microsoft and Meta contribute more than 20% of their revenues. If they lose one of those customers, that's going to have a huge dent to their revenue, and that's not good. Now let's talk about my buying strategy. This is again not financial advice. This is something that I'm doing. I do know that this business is very cyclical, so they will have a bad quarter because some quarters they can have a lot of orders for their hardware, they can sell a lot of hardware and gain a lot of money, but during some of the quarters their orders will not be as much, right? So since this is not a subscription based service or a software as a service business, you cannot assume a constant flow of revenue each quarter. So I'm going to take a small position, like maybe 3 or 4 shares of this stock right now at $162, and I will wait for a better price in the coming quarters. Maybe in the next 3 or 4 quarters they'll post one bad quarter and the stock price will fall down to $120, $130. And at that time I can take a bigger position because I am looking at more than 2x reward at that time. So in summary, I would take a small position at $162 and I will put significant amount of money if it drops to close to $130 in the coming few quarters, which I think will happen. Let me know your thoughts about Arista Networks. Thank you.